I just bought a can of Campbell's soup today at the 7-Eleven. It was $1.99 for the can. There's about 3 cents worth of tin plate steel in this can. So if it goes up 25%, that's a tiny fraction of 1 penny. That's not a noticeable thing.
Not noticeable. All right, March 2nd, the day after President Trump announced steel and aluminum tariffs, Commerce Secretary Wilbur Ross appeared on Fox Business and held up that steel can of soup and reassured Americans that prices would go up only fractionally. So fast forward to today, and manufacturers from Coca-Cola to Polaris, they make the ATVs, to Caterpillar, they're all raising prices as the cost of raw materials, steel and aluminum, used to make and package their products rises. Raymond James Washington policy analyst Ed Mills is joining us. Ed also worked as an advisor on Capitol Hill. Ed, let's get people the actual price moves here. Year to date, steel prices have vaulted, 33%, aluminum's up 11%. Is Commerce Secretary Ross still right that the price increases passed on to consumers is still negligible?
Well, I think we're starting to see the impact to the consumer. I do think that you look at this and say, you know, when I go to the supermarket, I don't see a big change yet. But we're always reminded that all politics is local. And so when we get towards the midterm election, China knows exactly where the Trump voters are. And so with their retaliatory tariffs, they are targeting the areas that are most likely to have voted for President Trump.
Well, help us understand how this all comes around full circle. President Trump's real interest in the beginning was to make sure that the U.S. steel industry not only was surviving, because it was kind of hanging by a thread, but thriving. We've started to see U.S. Steel and some other steel companies reopening mothballed plants and hiring steel workers. And last week, we had Jeff Flock at one of the rallies, and these steel workers were so grateful. Who is not grateful? Who is not happy about this? And do those interests, people who are the end users of steel and aluminum and finding their costs rising, will their voices be louder than the steel workers' voices? And would there be more of them to say, wait a minute, this isn't working out as we had anticipated?
Yeah, no, I think a lot of this really does come down to a debate of style versus substance. You know, ultimately, there are more consumers than there are steel workers, but there's also a lot of workers who are in plants and are in manufacturing that use this. You mentioned RVs. You're looking at different ATVs. Continental Nail in Missouri having to lay off individuals because their input costs are no longer producing a product that is competitive. I think ultimately the news here is we're still flooding the zone. There's still a big debate. If you take a step back, I think a lot of people say, hey, if Trump is fighting for this, that puts me on Team America. If I am not with him, I don't want to be on Team China. So politically, he still has the upper hand here. But if consumers start paying more every time they go to the grocery store or every time they make a new purchase, that's when the politics should start to change.
But can't he just lean on 4.1% GDP growth, which really is on a very strong trajectory? And he can look at the economy and say, you got more money, things are doing certainly looking better. There's that. But then you've got, as you said, China knowing which states. I'm imagining it's Wisconsin. It's Ohio, it's Michigan, to make sure that
Kentucky,
they feel
where the
pain.
Senate majority leader is. I mean, you're absolutely right. I think that this is exactly the reason why he is doing this now. I think when you talk to folks within the Trump administration, they say, when else, if we really wanted to have this fight, when else would we do this? We're doing this because the economy has really strong indicators. And I think the market is shrugging some of this off so far because they look at the midterm election as an end date to a lot of this and ultimately looking for a solution or at least an announcement of a breakthrough by November.
You mentioned the nail company. They are laying people off. Maybe that is the tipping point when you start to see more layoffs. And it was kind of interesting because President Trump really went after ZTE, this Chinese smartphone maker. But then as soon as that smartphone maker started to complain, we're losing all of these jobs, President Trump, I remember the tweet that he put out where he said that he had spoken to President Xi and that this was extraordinarily important. He and I working together to get ZTE a way to get back. Too many jobs in China lost was what he tweeted. Well, what if we start to see too many jobs in America lost?
Well, I think it's fascinating that you bring up ZTE here, because last time I was on, I said ZTE, their sanctions were going to be lifted. There was going to be a deal there. That absolutely happened. However, what the investment community looks at is even after those sanctions were lifted and Congress decided not to reimpose those sanctions, China decided to give a non-approval to a mega deal in the semiconductor space.
Qualcomm
so a lot
NXP.
of folks are saying, what did Trump get here? So I think that's the bigger political problem for him, where he gave up something big to the Chinese, and we didn't see a Chinese response. So we're looking potentially here for an escalation in this trade war with China, where tech could be next. We're somewhat running out of money in terms of what we could put tariffs on. We are looking at potential investment restrictions between U.S. companies and Chinese companies on what tech investments that they could have. That's my biggest concern.